Today we're going to be talking about how the budget could change UK commercial and residential property. If you own UK property or are thinking about buying it, this is definitely a video I can recommend watching because we're going to be giving you some insights into the UK property market. The autumn budget was nearly a month ago and we've finally been able to digest what the changes are and how they're going to impact the market going forwards. Today we're going to be breaking down in plain English what these changes are and how they might affect you. Let's talk about what actually changed. We found that there is actually more tax being shifted onto property. Not income, not corporations, property. Here are the really big changes. As of April of 2027, there are new tax bands. Your rental income and other property income will now be taxed at 22% for basic, 42% for higher, and 47% for additional. Basically, it's a 2% bump across the board. And that might not sound like a lot, but if you're heavily invested in rentals, this is a huge change. We've got a mansion tax surcharge as of April 2028. If your property is worth £2 million and upwards, you're going to be getting this extra charge. There's also going to be higher business rates for commercial buildings. If your commercial property has a rateable value of 500,000 or more, your business rates are sadly going to be going up. This will affect a lot of offices, warehouses, retail and mixed-use properties. Especially in city centres, to get to the valuation of 500,000 is not that difficult. And there are indeed capital allowance changes. This one's a big one if you're developing or renovating a property. Writing down allowance goes from 18% to 14%. But there is a 40% first year allowance on qualifying expenditure. You should contact us if you want to find out what this is. So to summarise this first section, new build or major development, good. Buying secondhand, you don't get these benefits sadly. Before we go any further, I'd just like to tell you here at My Tax Broker, we specialise in connecting you with qualified specialist tax advisors. We take a comprehensive look at your situation and see if you are eligible for any tax savings or refunds. We cover everything from capital allowances to family investment companies and everything in between. So if you click the link in the description below to contact us, we'd be more than happy to help. We work with individuals, businesses and professionals. Whatever tax query you have, contact us today. So what do these tax changes actually mean for you? Well, in this section, we're going to be breaking it down by each type of property owner. First of all, we've got commercial property owners. If your property does indeed cross that £500,000 mark, you're really going to be feeling the hit here. There's going to be lower net yields, pressure on tenants, and possible renegotiations. Certainly sectors like retail and hospitality. It's not looking too bright for these, but I think we'll be okay. And this extra charge is something that a lot of tenants are going to have to take on. And then up next, we've got landlords and residential investors. These new tax bands in 2027 in short terms are going to mean your take-home rental income is going to drop. If you're already squeezed by mortgage costs or Section 24 interest restrictions, this could push some landlords to consider whether some properties are actually worth keeping. Now, a lot of people might be thinking this is a good thing that landlords are selling up, but the problem is you've then come to the issue of supply and demand. And ironically, fewer landlords in the market means that for tenants, rents actually go up. Next up, we've got developers and people doing refurb projects. This is the group that might actually win here. The new 40% first year allowance gives a real boost to new build projects, major refurbishments, and heavy investment into upgrading commercial stock. But you don't get this if you're buying secondhand. So the market might actually shift from old building purchases to new developments. Certainly in cities like London and Manchester, we're seeing a huge amount of growth. Now we're going to be talking about the winners and the losers of the budget. Possible winners, developers doing refurbishment work, people buying smaller commercial properties under the £500,000 threshold, and investors focusing on stable sectors like logistics and warehousing. Now, I don't really want to call them the losers, but people who might struggle with this budget change. And that is owners of large commercial properties, high value residential properties at the 2 million plus threshold, landlords whose entire income is from their rental properties, and investors holding older buildings with no refurb plans. In short, if you've got a big expensive property, this budget is aimed at you. Now we've got to the part of the video where I'm going to be explaining what you should be doing with this new budget in mind. Step one is naturally you should speak to us. We can see if you are eligible for any tax savings or refunds. This could be on residential or commercial property. We'd love to speak to you, find out about your current situation and see if we can make any savings in the form of a capital allowance saving or even a business rate change. We do not charge anything to do a review of your portfolio, and we can see if there are any tax savings or refunds you're eligible for. The next thing you can do is actually review your portfolio. Flag anything high value and see what your cash flow looks like with these new rates. Next up, we've got consider shifting strategy. Thinking about buying older buildings? Well, you might want to run those numbers again. And then we've got stress test your properties. You really want to ask yourself, what happens if my tenant doesn't pay or moves out, or I have the property vacant for some time? Always run worst case scenarios. It's worth it because sadly it can happen. And then we've got consider restructuring. This might be the moment to look at corporate structures such as a family investment company or diversifying. Now, if you do want help with structuring, please contact us because this is something that we can help with. And finally, we've got staying updated. These changes don't kick in until 2027 or 2028, so you do have some time to think about what you're going to do moving forwards. This has just been a brief summary to how the budget is going to change UK property. Now, if you like this video, please click like and subscribe and leave a comment below about the changes you think are going to happen next year in UK property, but also what you're going to be doing with your portfolio, because we would love to have your input. And finally, thank you very much for watching, and I'll see you again in the next video.